Good morning, everyone. So, welcome to Startup Change Leaders weekly meet. So, today we are going to talk about seed capital and seed funding and seed capital is very, very important for the startup entrepreneurs. And we all know that um, the seed capital is something which is very much essential, and without seed capital, you can't survive. In fact, the start of the startup, ecosystem, we need, seed capital, whether you bring it from your own sources or you bring it from the the person who is actually bringing in or starting the startup, or uh, from friends and family, and then gradually you move to the investors who eventually invest in your startup. Now let us look at what is the seed financing, because this word itself is sometimes not understood well by everyone. So I thought, let us have a detailed discussion on what is seed capital, how seed capital can be raised, what are the avenues of raising the seed capital, who are the people who actually do the seed capital investment, angel investment to talk about, and how we can actually raise this seed capital. Now, if you we can or we all understand that seed financing is uh, basically the money or a seed funding which is at the early stage, which you can raise, and this is the earliest stage of capital raising for a startup, because when you start your from the ideation stage, you think about your startup. So immediately you plan that we will be requiring this much of seed capital to have your POC. You have to have your uh, uh, initial model to be displayed to the people, to have your patents registered, to have your the basic maybe registration of the company or registration of the you know with the Startup India ecosystem. So all that, the initial fundraise is required, that requires a lot of seed capital. So first, seed capital comes from the startup entrepreneur himself, because they, along with their friends and family, they come and register the company, register themselves at Startup India portal, and then they present their idea to the investor community. And the initial stage of capital raising is basically the seed financing. Now, so it's basically a equity based financing. It can be, as we earlier also discussed, CCPS is also one of the route. So cumulative convertible preference shares are also one route which is very prominent these days for raising the seed capital. And in other words, investor commit their capital in exchange for an equity interest in a company. Now, this can be a immediate equity interest. This can be a future equity interest as well. So when you are actually going for the seed financing or seed capital, you commit yourself, and you actually uh, mm, you know basically you allot the shares to the investors for and they are putting their money into your company with the uh, you know very clear understanding that okay, they are going to exit uh, and make their money 2x or 3x or 5x over a period of time, and they are actually trying to make sure that they make so they synchronize or they understand your idea, they gel with your idea, and then they actually uh, kind of participate in your thought process that okay, this project or this idea which you have conceived is going to work, and they put their money on in the company, and that itself is called the seed capital. Generally, this is done in a less formal approach relative to other forms of equity-based financing, such as venture capital. Now, venture capital is basically a capital which is raised from venture capitalists. When institutional rounds start, when you start, so there are a series of funding options you have. So you have one, you start with the seed round, and then you move to the sometime there is a pre-seed round also, seed round, and then you move to series A, series B, series C investments. And so seed capital is an investment which is there before the initial round. So this is what seed capital. So let's look at for startup how the seed capital is raised. As I mentioned, uh, equity stake is given to family, and they are issued the seed capital. Then you come to friends. Once you are done with your family resources, you move to your close friends who know you, who are willing to take a risk on you, who know your capability and capacity to perform, and they actually give you a lot of leeway as to where you can find your seed capital. So once you have issued the that capital to the family members, you move to the friends, and these friends also definitely will ask for equity stake in the company. So this equity stake is given to the friends as well. And then we move to the investor community, and there also the seed capital is raised through issue of equity to them. As I mentioned, it can be a CCPS or a direct equity participation. Now, where is this, or what is the use of this seed capital? Now, the primary use of the seed capital is support initial company's operation. For example, proceeds of seed financing can be spent on market research, on the initial step of product development, creation of prototype, or essential operating expenses such as legal cost. As you know that for company formation and for Startup India registration, for presenting your idea to the investor world, you need a proper professional pitch deck, and also you need a battery of uh, you know uh, contracts and battery of lawyers also working with you, so that whatever contracts you are doing or whatever uh, documents you are signing with the investors, for example, shareholder agreement, SHAs, they are called. Now, these SHAs are having certain clauses which you also need to understand very well, and you need to actually make sure that all that is properly taken care. So legal documentation is also very, very important. um, and your seed capital goes in that also, that you need to create a proper legal documentation for your startup. And then the commonly raised this is commonly raised from family members, as I said, friends or angel investors. Now, angel investors are most crucial players in the seed financing, as they can provide substantial amount of capital, and that too at a premium. What happens is, initially when you are issuing your capital, you may be issuing it at par to the initial promoters, but when you actually start going to the investor community and to the investors, you issue that at a higher valuation, because you have already put in your hard work, you have already put in your sweat and blood, I should say, in the organization. You have conceived the idea. You already have maybe registered the company also. You already have come to uh, you know registration at Startup India. So you are actually on the track. And when you already have everything, the company in place and everything in place, then you go to the angel investors. And the angel investors are the ones who will definitely look at your project. They will analyze. They always have a third party view as to whether this is going to be a workable proposition or not, and they will look at your project and put their hard-earned money on your project. So you need to be very, very clear that you also or offer a value enhancement, because why these investors come to you. They come for the enhancement of the valuation of their money. So if they are putting uh, 100 rupees today, they are expecting that maybe they can sell this equity at a 500 rupee, right? So almost all investors, uh, they are looking for at least 5x returns. And they but they are willing to wait. They are willing to look at your project, and they are willing to, okay, put their money and, okay, wait for your company to succeed. And that is where I think the responsibility of the entrepreneur also is there to use this seed capital in a very judicious way, and raise the money so that it becomes a good return for the investors. Now, seed financing as an investment vehicle, seed financing is the riskiest form of investing. It involves investing in a company in the earliest stage of development, far before it generates revenue and profits. So when you are putting your money in the stock market, you are yourself aware, what is the performance of this company, what are the performance indicators, how's the EBITDA, how's the revenue, what is the growth percentage, what is the percentage of growth vis-a-vis the industry percentage, whether this company is growing more than the industry percentage of growth or less than the industry percentage of growth, whether the EPS is within that industry standards, whether the PE ratio, price earning ratio of the share is there, is very good or not, what is the potential for making earning and making this money very high. So I think that is very, very important aspect. Kindly mute yourself, please, Kailashi.
Sorry.
Yeah. So that is where I think the important part is that you are aware in the stock market as to what is the overall potential of earning for you. But in the case of startup, you are actually taking a risk, big risk, and you are just buying the idea of the entrepreneur. You are actually putting your money on a simple idea of this person, and you are not putting you are taking risk actually on the overall startups ecosystem. So the seed financing involves investing in a company at its earliest stage, far before it generates revenue or profit. I think this is very important for us to understand, that even before earning profit, you are putting your money. with the expectation that this company will earn a good revenue and eventually will earn profit for you. And due to such reasons, venture capitalists or bank usually avoid seed financing because they don't have a benchmark. So some venture capitalists, they have this uh, very clear understanding that okay, we are not going to invest in company which is not having a traction of 2 years or 3 years. So they come in only after 2 years or 3 years of operation, when the company has a revenue stream to talk about, when the company has something to show, and the company has something to present to the uh, you know to the everyone. So I think that is where uh, the difference between the seed capital and venture investment is, I think, can be well understood. So the people who are taking risk, more return, right? So the people who are taking risk definitely expect higher returns, and that is where the investment in the startup ecosystem is coming. And these seed investors, that is why they are called angel investors, because they are actually taking high risk on you, on the startup, and they are putting their hard-earned money to and giving the fillip to the overall working of the startup. In addition to the seed financing, uh, seed financing is probably the most complicated form of investment because the potential investor does not have enough information to make a completely informed decision. Now, as I said, that in stock market you have all the database with you to look at the performance of the company. You even have performance indicator. You can look at the graphs. You can look at the various models of growth, and you can compare the performance of the company with other companies as well. But in this, you are purely actually putting your money on the in capacity and capability of the entrepreneur or the startup entrepreneur. So you are actually uh, you know taking a very big call on them, and putting your money and expecting that okay, they will perform according to your expectation. Now, in most cases, the key factor for a successful seed investment include the viability of the idea behind the product or service to be developed by a company, and the ability of the management to realize the idea. Now, this is again a very, very important aspect that you need to actually look at the viability, and of course, you need to look at the ability of the management to realize the idea, and the soft skill of the company management also plays a crucial role in making the right seed investment decisions. However, management experience is not always significant. Uh, for example, many tech companies, they have uh, mm, you know. Such as Facebook, Google, were founded by individuals with almost zero experience in running a business, and that's a fact. That it's not that always you can have uh, uh, experienced people launching these startups. These startups are launched by sometime even rookies who don't know much about the business. Sorry, but they actually plan because the power of the idea is so good, because when Facebook came, the idea itself was so strong that it worked. People got connected with the idea, and it created a ripple effect, and lots of people uh, you know came, and they were utilizing the services of the Facebook. So now this is what we all need to understand, that if the idea is very powerful, if the story behind the idea is great, then there is no stopping for a person uh, to have a excellent the return on the seed capital is the most important thing. So you have a very high return on the seed capital, and that is where I think the most of the things work because the return is the most important aspect, right? So despite risky profile seed financing opportunities, they provide immense return opportunities to investors. One of the most notable example is American entrepreneur and venture capitalist Peter Thiel's investment in Facebook. Now he put the money at a very early stage in the Facebook, and that is where he got a very huge profit on his investment, because Facebook ultimately became very huge story. So Thiel became Facebook's first outside investor after contributing 5 lakh US dollar in exchange to 10% stake in the company. And in 2012 and 2017, Thiel sold most of his stake in the company, earning more than 1 billion in total for his shareholding. Now, after investing only 5 lakh dollars, he made 1 billion US dollars. So you can imagine the kind of return he got on his investment. Now, this is what the seed capital story is all about. I think we can all understand from this how the seed capital works, how seed capital actually is making lots of change in the entrepreneur's journey, and the overall progress which happens uh, and the money which you make by putting your hard-earned money, of course, to in a startup company is phenomenal, because this kind of a return you can't expect in stock market. Stock market, as you know, at the most you get 20% or 25%, but you can't get this kind of a 5x or 10x or 20x or 40x growth uh, in the stock market. So that is where I think the returns are phenomenal. And that is where we come across the companies which are uh, making so much of money. Now, what is private equity versus venture capital versus angel and seed investors? I think this is very important aspect for us to understand that what is the this uh, main uh, what is this for now, if we look at private equity versus venture capital versus angel and seed investment, now we need to make a detailed comparison of private equity versus venture capital and the seed investment. Sometimes we confuse between these three classes of investors, especially because they overlap a lot and the distinctions are not always super clear. So, because people don't understand sometimes what is the private equity, and how that is different from venture capital or angel and seed investment. And they are the most important things you need to know about private equity, venture, and seed investment. And what we come across is that people are always uh, looking at initial money, but the I have tried to bring in the change or the distinction between these three terms, so that we are all very clear by the end of this session that what is the difference between the seed capital and this one. Of course, the risk and return are different in these three. So seed and angel investment is a very risky proposition, whereas venture capital and private equity have comparatively less risk attached to it. So this is basically risk and return stage of the business is the main important aspect between these three, as I mentioned. And when you are in the seed, you are putting your money in the seed stage, you are taking a very, very high risk because you are not, having very clear view of how the company is going to perform. And this, of course, uh, will, reflect in the return also, because when if you are making money, your return is very, very huge. Whereas in the case of venture capital, you are in the middle of the whole thing, right? The company has already performed, say, for 1 year, 2 year, 3 years, and you come in at that stage, you put in your money, you have some idea of the traction of the company, and then uh, you actually get into a private equity stage, where in case private equity, you are putting money, so you are very clear as to how the company is performing, and based on that performance only, you are putting in your you know money in the company, and of course the returns become lower in that case because you come at a very high valuation. In the seed stage, you get a very, very lucrative valuation. For example, you may get the shares of the company at very, very less value, so you may get a high capital by investing lesser money. So that is where I think the difference between the two lies. No? So comparison table I have tried to bring into you. Uh, uh, this is a table for private equity versus venture capital versus angel and seed investment. Now, if you look at this table, we can easily make out that what stage of business, uh, seed and angel, it is founding startup or pre-revenue stage. In case of venture capital, it is early stage or pre-profitability stage. In case of private equity, it is mid or later stage or profitable or already cash flows are there in the company. So the this is the difference or distinction between whether you are doing a seed investment or venture capital or private equity, right? Now, size of investment, of course, in the seed stage, the size of investment is maybe $10,000 to a few $1 million. But in case of venture capital, it will be few million to tens of million. And in private equity stage comes at the third level. So it is always a few million or $1 billion investment, and they are the ones who come in when the company has already proven its worth, it proven its metal. They are already earning good money, and they are successful. So so you are riding on the success of that model because you already know that that model has become successful, right? Uh, mm, uh, One example recently we saw Zepto. No, Zepto is when the idea came, even I was not very convinced that this kind of idea will succeed. That okay, 10 minutes delivery, but it excited people. People are, they started giving orders, and the company suddenly became very big. The model became successful. They had people availing their services, and they definitely, the early investors who invested in the idea itself at Zepto must be called. They are the seed investors. But then at the later stage, when the idea already has become successful, the people who became after that, they were venture capitalists. And the last stage is private equity, as I mentioned. So and the type of investment is equity or safe notes, what is CCPS, we call it. In venture capital, it is equity or convertible debt, and in private equity, it is equity with leverage. How you are going to leverage your equity over a period of time. Investment team is entrepreneurs or past founders. In venture capital, it is mix of entrepreneurs, bankers, or finance companies. And in private equity, it is mostly bankers and finance professionals who are dealing with the private equity part, because this is more of a analytical investment, because they analyze whether this is going to work, and then they put their money in the on the company. And level of risk, of course, we all understand. It is extreme risk, high chance of losing all money in case of seed and angel investment. In venture capital, it is high risk, moderate chance of losing all money. And in private equity, it is moderate risk, low chance of losing all money. So, risk is there in all the stages, as we can see, but it is extremely high, high, and moderate risk. So that's the difference between the three forms of investments. And return profile, you can even get 100x returns in seed investment. In venture capital, it is 10x return targets. And in the case of private equity, it is around 15% IRR. Even then, the equity investors are happy, because they are getting, in any case, return which is higher than what they are getting in bank interest rates. So even if they are getting 15%, they are very happy about it. Now, if we look at the industry focus, it varies from firm to firm. And of course, this is the same, for everyone, whether it is a seed investor or venture capital or private equity. Now, investment screening, if the seed investors are screening the founders, they are screening the addressable market, market share potential, virality, users, etc. No, because they don't have anything else to look at. They can only they are putting their money on the idea itself. They are putting their money on okay, whether this is going to be succeeding or not, this idea. Whereas in case of venture capital, it is they are looking at the founders, they are looking at the market share potential, they are looking at the revenue, they are looking at the margin and growth rate. So there is a data to look at, there is a data to talk about, and they are looking at that particular data for analyzing their growth story. And in case of private equity, it is EBITDA, cash flow, IRR, and financial engineering. So that is where I think uh, all this is going to work. So I think it is very, very important that we understand what is the difference between these three. That is the private equity, venture capital, and angel and seed investment. And I think from this chart, it's quite clear as to what all we need to look at. Now, the stage of businesses, private equity versus venture capital versus seed investment. We all understand the name implies seed or angel investor are usually the first investor in the business, followed by venture capital firms, and finally private equity firms. So this is what I mentioned earlier as well. Now, let us look at, what is the stage at which these three players come in. So for angel investment or seed investor, they participate in the businesses that are in a very early stage and maybe pre-revenue with a few or no customers at all. because we don't have only idea is there maybe sometimes, and the customer and others will come later. They could simply have a well developed business plan, prototype, beta testing, minimum viable product, and to be at a similar level of development. Some of the businesses, however, may have revenue or even cash flow. It's not to say that they can't have those things. It's just that they frequently don't approach these angel investors. Venture capitalist firm typically invest in businesses that have proven their revenue model, or at least have sizable or rapid growing customer, and with the revenue strategy in a clear sight. Because when venture capitalists come in, they have already got clear understanding of the revenue model of the company, and they also know how many customers are already there and at what rate they are growing, and the growth traction is very clearly visible. And in case of private equity firms, when the company has gone beyond generating revenue and developed profitable margins, stable cash flow, and is able to service a significant amount of debt. To learn more about various types of cash flows, we have cash flow guides which are available, so you can Google that, and maybe you can understand how the cash flows actually impact the company. But type of investments, if we look at in case of angel and seed investor, they can only invest in equity, as businesses they are targeting are at very early stage, and there is a, as I told you, in safe notes, a simple agreement for future equity, which is also called CCPS in India, because the safe notes are not allowed as of now in India, but the other name is cumulative convertible preference shares. So now you actually through this, you say that, okay, today I'm giving you CCPS, which will be converted into equity, say after 2 years or 3 years, right? So this is how the whole concept works. VC firms, they invest in common equity and preferred shares and convertible debt securities in companies. So their focus is on equity upside. So even if they invest in convertible debt securities, their goal is to eventually own the equity. And preferred shares can have all sort of special rights, privileges to protect the investors. Because in case of preference shares, even if the company goes into bankruptcy, the preference shares will get definitely preference. They'll be settled first. So that's the difference between preference shares and the normal equity shares. And so it protects them from future dilution of equity interest, right, warrants, etc. So this is how the VC firms operate, and the PE firms typically invest in equity, but also borrow a significant amount of money to enhance their rate of return. So they do leveraged buyouts also to maximize the amount of debt they can use in the deal, and they also kind of borrow money and then invest sometimes. So they are playing on the internal rate of return. So the ball game is different in all these three cases. So in seed and angel investor, they are typically entrepreneurs who founded their own companies, had successful exits. So they out of those exits, they start putting money in different new ideas and new companies. And their main skill set is understanding the role of entrepreneur in the business, and they have a very significant, very specific product knowledge. So they know the business. So that is why they come in as a seed or angel investor. Venture capital investors are a mix of entrepreneurs and ex-investment bankers, as I said, and finance professionals. And private equity firms are ex-investment banker or corporate development types or experienced corporate operators. That's the typical mix of these people. So I think we understood how these three terms are different. Now I am open to the questions. Anybody with any question, please feel free to ask. Any questions, please? Yeah.
No, Rajiv. So in this, why is this venture capital or private equity called as a very dangerous capital? Any idea?
Venture capital or private equity capital called dangerous capital?
Yeah. Some people are saying that no, it is very dangerous. They'll ask you a lot of questions and all.
No, I mean, questions in any case, every investor asks. Let me tell you, I'm part of the various deals which are happening in the market these days. Even the seed investor asks you many questions, right? But the level of questioning goes up because, at the seed stage, I tell you what is the difference. When at the seed stage, you are talking on your idea. You just say, oh, this is my revenue model, this is my potential, I will have these many customers, I will have this much of revenue, I'll have this much of profitability. All those are forecasted figures, right? You are just an idea, and you have a prototype already ready, but rest of the things are all on paper. So the questions are there, but they become very limited because the forecast is a forecast. They may ask, okay, how this forecast, how you are calculating this revenue, or how you are actually looking at this figure or this number. But honestly speaking, they don't have much analytical questions to ask because it is all forecast. They are also taking a risk on you, on your judgment, right? They may, at least they at the most, they may contradict that judgment. But when you are at a stage where you already have some results to talk about, they definitely will ask you, okay, how your results are lesser than your competitor, how your competitors are faring. If they are growing at 20%, why you are not growing at 20%? If the industry average is 30%, why you are growing at 25%? If the industry profitability ratio is 10%, why your profitability is only 5%? No, these kind of questions will come because they will have some benchmark to talk about, because you are already uh, you pass the stage of early stage, right? You are already having results, you are already having the something to talk about. And in the private equity times, it's already, you are there for 2 years or 3 years or 4 years. You also have cash flows, you also have very clear delivery model, you have a beta to talk about, you have your growth story to talk about. So I will not say dangerous, but yes, you need to justify your numbers in a more detailed way, because you are already there in the market. And why your customers are not growing at this age? What is your monthly run rate? They may ask, okay, how, what is your per customer cost, acquisition cost of a customer? So all these questions will come in because you are already operating, you are already showing the results, and you can't fudge your data, and the data is in front of them. And you need to be very transparent. No, my advice to all the startup entrepreneurs is, you always try to be very, very transparent, because if you are not transparent, if you are trying to hide your actual situation, then you may have a very difficult time. So it is very, very important that you actually uh, be very transparent and be very clear on your understanding.
यस सर, मेरा भी एक क्वेश्चन है।
जी जी
तो सर आपने जैसे अभी फेसबुक पे जैसे फेसबुक एग्जांपल लिया, तो वो तो ये था कि वो एक वेब प्लेटफॉर्म था, और जो मेन फीचर थी ने देखा होगा कि वो फेसबुक अटेंशन ग्रैब कर रहा है, इन द सेंस कि वो लोगों को प्लेटफॉर्म पे लेकर आ रहा है, तो बहुत सारे लोग वहाँ पे अवेलेबल होंगे, लेकिन उनका
जी
कोई रेवेन्यू मॉडल उस टाइम पे नहीं था।
जी
लेकिन वो तो एक सॉफ्टवेयर हो गया, मतलब वो एक नॉन फिजिकल थिंग हो गई एक तरीके से, वो जैसे
जी।
सॉफ्टवेयर वेब प्लेटफॉर्म हो गया। लेकिन अब
हम्म,
अगर हम किसी फील्ड में जाते हैं, या किसी और किसी बिजनेस फील्ड में जाते हैं, तो मोस्ट थिंग आर फिजिकल। तो
हम्म,
अगर उस लेवल पे अगर आप कुछ ऐसा कुछ एनर्जी या फिर ऐसा कुछ जनरेट करते हो जो पता आपको कि सेल आउट होगा, बट यू
जी
डोंट हैव अ रेवेन्यू मॉडल, मतलब रेवेन्यू मॉडल तो है, पता आपको चीज बिकेगी, लेकिन
जी जी
आपके पास जो प्री कंपाइल्ड लोग नहीं है कि भाई जो आपको इस चीज को खरीदेंगे एक तरीके से।
जी जी
उसे
जी
खरीदने वाला कोई भी हो सकता है, बड़ा बिजनेस भी हो सकता है, कॉमन बंदे भी, पीपल भी हो सकते हैं, गवर्नमेंट भी हो सकती है। तो
जी।
उस मॉडल में आप कैसे, मतलब इसको इसको किस तरीके से सेल आउट करेंगे एक तरीके से बिजनेस को, आइदर वो सीड इन्वेस्टर हो या एंजल इन्वेस्टर हो एट मोमेंट ऑफ टाइम। एक एंजल इन्वेस्टर तो बाद में आएगा, सॉरी सीड इन्वेस्टर को कैसे सेल आउट करेंगे इसको हम, मतलब ये पूछ
सीड
रहा हूँ।
इन्वेस्टर को देखिए, सीड इन्वेस्टर एज वी मेंशन्ड, दे आर दी पीपल हु आर टेकिंग एक्सट्रीम रिस्क, नो। तो वो क्या एनालिसिस करेंगे? वो सबसे पहले आपको एनालिसिस करेंगे कि आप क्या चीज़ है, राइट? आपके पास क्या कैपेबिलिटी है उस आइडिया को एग्जीक्यूशन करने के लिए, राइट? आपके पास कितना परफॉर्मेंस का दम है कि आप ये आइडिया को सक्सेसफुल बना सकते हैं, राइट? और आपकी जो आइडिया है उसमें कितनी ओरिजिनलिटी है और आप क्या प्रॉब्लम सॉल्व कर रहे हैं। स्टार्टअप का एक बड़ा मेन इम्पॉर्टेंट चीज़ है कि यू आर सॉल्विंग सम प्रॉब्लम, राइट? नाउ व्हाट प्रॉब्लम यू आर सॉल्विंग, हाउ बिग इज दैट प्रॉब्लम, एंड व्हाट इज द योर सोल्यूशन। आपका सोल्यूशन कितना इफेक्टिव है। फेसबुक ने भी क्या किया? फेसबुक ने एक प्रॉब्लम सॉल्व करी। प्रॉब्लम क्या थी? कि लोग एक दूसरे से टच में नहीं रह पाते थे, राइट? जब हमने फेसबुक यूज करना शुरू किया, अब तो कई तरह की चीजें आ गई। तब सबसे बड़ा एडवांटेज यही था ना कि फ्रेंड्स के बर्थडेज, फ्रेंड्स के बारे में, फ्रेंड का फॉरेन ट्रिप, फिर लोगों ने जबरदस्ती फोटोग्राफ्स डालनी शुरू कर दी, राइट? And we came to know about each other, and it was a very good medium to stay in touch. You can chat with your friends, you can actually make new friends and things like that. So they were solving one problem of the people, no? And that is why they became so popular, right? एंड उससे पहले भी तीन चार प्लेटफॉर्म थे जो फेसबुक जैसे थे, लेकिन जब फेसबुक आया तो वो प्लेटफॉर्म भी खत्म हो गए, राइट? एंड अभी कुछ और प्लेटफॉर्म ऐसे आ गए हैं जिसने फेसबुक को भी इम्पैक्ट किया है, no? तो तो ये दिस इज वेरी नेचुरल थिंग। बट यू आर कमिंग बैक टू योर क्वेश्चन। योर क्वेश्चन इज कि हम कैसे उनको बताएंगे। देखो, यही तो रिस्क वो ले रहे हैं कि वो आपकी कैपेबिलिटी को देखते हैं, आपकी वो जो आइडिया है वो कितनी बड़ी प्रॉब्लम्स का सलूशन हो रहा है, कितनी उससे ट्रैक्शन आएगी, कितने लोग उससे जुड़ेंगे। देखो, इन सब कंपनीज की वैल्यूएशन तो इसीलिए बनी ना कि इनके पास यूजर थे। यूजर इज बिगेस्ट एसेट फॉर देम, राइट? कि इनके पास डेटा है, यूजर है, और वो यूजर के थ्रू और बाकी लोग अपनी एडवर्टाइजमेंट करके अपने प्रोडक्ट बेच रहे हैं, नो? रेवेन्यू मॉडल तो उसी से निकला फेसबुक का भी, कि वो उन्होंने एक प्लेटफॉर्म बना दिया कि उसके ऊपर फिर लोगों ने अपनी ऐड करनी शुरू करी, अपना बिजनेस एक्सपैंड करना शुरू करा, लीड मैनेजमेंट करनी शुरू करी। और Similarly, LinkedIn. Similarly, there are a lot of other platforms now which have come up. और आपका तो WhatsApp आप जिस तरह से यूज कर रहे हैं, तो दैट इज कम्प्लीटली एक रेवोल्यूशन आ गया है, राइट? इन
ओके सर, यस, सॉरी इंटरप्ट, मैं एक क्वेश्चन ऐड करना चाहता हूँ। मतलब
जी
मेरा सिंपल क्वेश्चन इसको इस तरीके से कहेंगे कि अगर आप एक मतलब आप एक स्टार्टअप हैं और आपको लगता है कि आपका जो बिजनेस मॉडल है वो काफी मतलब जो पूरा मतलब इट्स हैवी मतलब रेवेन्यू जनरेट करेगा, लेकिन वो बहुत कैपिटल इंटेंसिव है। इनिशियल
जी
स्टेज में आपको बहुत ज्यादा मतलब सीड फंडिंग चाहिए, मतलब पैसा
जी
थोड़ा ज्यादा चाहिए आपको। सीड फंडिंग नॉर्मल कंपनी खोलने के अलावा उससे बहुत ज्यादा आपको एडिशनल पैसा चाहिए होगा, तो उसके लिए हम कैसे अप्रोच करेंगे मतलब सीड फंडर्स को
उसमें
मतलब
उसमें मैं आपको एग्जांपल से समझाता हूँ। जैसे
जी
एक कंपनी है ब्लू स्मार्ट, नो। ब्लू स्मार्ट ने देखा कि जो ये टैक्सीज चल रही हैं, ये बहुत एक्सपेंसिव होती जा रही हैं, ओला उबर एंड ऑल दैट, राइट? तो उन्होंने इलेक्ट्रिक टैक्सी का कॉन्सेप्ट इंट्रोड्यूस किया, ठीक है। उन्होंने, उनका भी बहुत कैपिटल इंटेंसिव था, इसलिए मैंने ये एग्जांपल पकड़ी कि उनका मॉडल ये है कि वो कार खुद खरीदते हैं, नो, और फिर वो कार्स ड्राइवर्स को हायर करके बोलते हैं कि आप कार्स ये चलाइए, बट दे आर चार्जिंग लेसर देन ऑल दी अदर cars because they are on electric, and also less pollution and all that. That was their forte. तो तो जब ये कैपिटल इंटेंसिव प्रोजेक्ट को करना था, तो इस आइडिया को इम्प्लीमेंट वो पूरे इंडिया में एकदम से नहीं कर सकते थे। तो उन्होंने क्या किया, जोग्राफिकली पहले सबसे पहले गुड़गांव पकड़ा, ठीक है। फिर गुड़गांव से फिर धीरे धीरे दिल्ली एनसीआर पे आ गए। फिर दिल्ली एनसीआर से अब नाउ दे आर ऑपरेटिंग इन 2 cities, दैट इज दिल्ली एनसीआर एंड बैंगलोर। पीछे बैंगलोर का उन्होंने लॉन्च किया था। सिमिलरली एक और कंपनी है जो सिर्फ डिलीवरी मॉडल में है, जिप करके। जिप का भी यही है, वो बैटरी ऑपरेटेड ईवी फॉर डिलीवरी चलाते हैं, राइट? तो ये
राइट
जो उस केस में आपको क्या करना होगा कि आपका अगर कैपिटल इंटेंसिव, आप थोड़े कम जोग्राफिक एरिया में उस मॉडल को पहले सक्सेसफुल बनाएं, राइट? आप सीड इन्वेस्टर आपको थोड़ा सा पैसा देके आपको वो मॉडल टेस्ट करने के लिए एक लीवरेज दे देगा, बट फिर आपको जब आपका वो मॉडल सक्सेसफुल हो जाएगा, वो दिखेगा लोगों को कि यस ये चल रहा है, पीपल आर एक्सेप्टिंग इट एंड इट इज एक्चुअली यूजफुल, तो फिर आपको वेंचर कैपिटलिस्ट को अप्रोच करना है, क्योंकि वो ऑलरेडी आपका वो सीड से आप वेंचर कैपिटल स्टेज पे आ जाएंगे। फिर आपको ज़्यादा बड़ा पैसा मिलेगा, और उससे भी आगे बढ़ेंगे तो प्राइवेट इक्विटी लेनी पड़ेगी। तो ये स्टेज, इसीलिए फॉर दीज काइंड ऑफ कैपिटल इंटेंसिव, ऑफ कोर्स आपको पहले थ्रू योर प्रेजेंटेशन, थ्रू योर पीओसी, जो प्रूफ ऑफ कॉन्सेप्ट जिसे बोलते हैं, वो एक बार एस्टैब्लिश करके एक छोटे जोग्राफिक एरिया में उसको सक्सेस करके दिखाना है, तो फिर ऑटोमेटिकली आपको ट्रैक्शन मिलेगा।
जी, ओके, थैंक यू।
ओके, एनी अदर क्वेश्चंस प्लीज?
Could you please give some examples of venture capital and private equity? Because
Yeah. Private equity firms are, Ajish, are the ones who will come in at maybe the third or fourth year of operations. They are not the ones who, इनका कईयों का benchmark होता है कि they want to have 3 year balance sheet. They want to look at, they want to see the numbers, revenue numbers, and they are basically mainly institutional investors and finance professionals, as I mentioned in my presentation also. And
institution, sorry to interrupt, institutions in the institution investors means like mutual funds, can we call them?
no, not mutual fund. For example, ICICI has a private equity team. Even HDFC and others, all the big banks, they also have now these days private equity teams. There are certain US funds who are into private equity only. So they are basically, they get into fairly mature businesses. So the business is already out of that seed stage or a venture stage. No, seed stage is pure pre-revenue. Venture stage is when your revenue is, say, okay, 1 year, 2 year kind of attraction is there. But private equity player will definitely come after you have proved yourself, maybe third, fourth year or something. Then they come in. They take the equity at a higher valuation, so they don't make so much of money. They will buy, say, at a premium of 500 rupees or 1000 rupees, that share. But they are working on the IRR. Okay, even if I get 15% return or 20% return on my investment, that's good enough. So they earn like a banker, because banker also earns not more than 10 to 12%. They give you loan at 10 to 12%, right? So private equity players are also having a IRR ratio of around 15%. They are not looking 10x or 100x returns. So that's the difference between venture capitalist and private equity player.
Thank you. And also you mentioned like cash drivers. You could see somewhere in the talk. Could you just elaborate more on
Cash drivers means
like
cash flow.
Cash flow drivers.
Yeah. Cash flow is basically how much money you are churning out and how that money is coming back into the system. No, so when you are, um, you are profitable, so that means you are making cash. No, you are earning more money, and that money comes back into the company, into the and that money also gets reinvested into the company, and that generates more money and more revenue and more business for you. So the cash flow drivers, how much cash is generated out of the company. So cash flow itself is a very systematic way. I think we will have a session on this because this is a little complicated, but a very, very important aspect. Every startup entrepreneur should understand how the cash flow management works. And I think I will plan a session on this, Adish, and where we will only talk about cash flow. But cash flow is a very important aspect. Yes.
So my question is,
Yeah.
just like we have really good idea, basically that solving really good problem, but the pitch deck is not good. So how I created that pitch deck, that communicate.
You need a professional to do that, because when you are in the initial stage of your of your the startup, you need to be very clear that you have a very clear understanding of and you make the investor also very engaged in your idea, right? So pitch deck has to be very, very we had a session on pitch deck earlier as well. Maybe we'll plan someday again. Pitch deck has to be very precise. 15 slides should talk about what problem you are solving, how much traction you can create by your startup, and what is the team behind. And it should have a professional look. It should not be more than 15 minutes kind of a affair. And then you need to if you are not able to do it yourself, better to hire. These days professionals are there who can guide you on how to pitch your startup to the investors, and how to create a very professional pitch deck. Okay.
Is there any platform that help us to present our ideas or pitch, practicing the pitching? So
Yeah, pitch practice. There are certain communities who are having pitch practice sessions. We will also plan someday this kind of a session. So you, all of you who are joining for the first time, I have left my number in the chat window. You may WhatsApp to me your details. I'll add you in our community WhatsApp community list, and you will keep on getting the notification about the sessions, and definitely which practice you can do, and or you hire a mentor who can actually guide you and work with you in pitching the idea to the investors. So my number is there. You can get in touch with me. We can talk about it. Okay.
Yeah. And is there any way to find this seed or angel investors? Like suppose a person is interested in real estate. Is there any angel investors in real estate? If someone is interested in plantation, some groups like that.
Yes, Adish. There are, different, there are sector agnostic seed investor groups also. Like Mumbai Angels are there, Chennai Angels are there. So there are some sector specific investor groups also. So there are some investors who are only putting their money in agri space. There are some investors who are putting their money in a particular e-commerce websites or the EV space, or for example, example. So there are groups, and I normally keep an eye who is doing what. So if you need any specific help, you can get in touch with me.
Thank you.
Okay, thank you everyone for joining and making this a very interactive event. I think we achieved our objective of learning, and that is what we stand for. So we at Startup Change Leaders, we are meeting every week. So do send your comments to me on my WhatsApp on the feedback on this program as to if you need some more topics to be covered, please convey that to me. You can put it in the chat window. So I'll be very happy to organize those sessions as well. This is this we do for mutual learning and mutual development. So let's keep improving each other, and we will definitely achieve good results by this regular interaction between us. Thank you so much. Thank you.
Thanks for the wonderful session.
Thank you.
Thank you, sir.
Kailash. Thank you. Bye-bye.